Assalamualaikum. My name is Muhammad Shaheen bin Shahrin, and today I would like to present for introduction on size. CIMB is among the top banking group in Asia with total asset of 755.1 billion as for 2024. This include 512.3 billion in customer deposit and 452.3 billion in gross loan, reflecting both customer trust and CIMB strong financing group. Even during economic downturn, the bank managed to grow its asset, showing strong resilience. Its 14.6% CET1 capital ratio also highlights solid stability and compliance. With over 33,000 employees serving 28 million customers and supported by 592 outlets and 6,000 operating points across South Asia, CIMB wide range and strong financial base make it a clear market leader in the region. For the market present, CIMB has built strong brand awareness across Asia and even beyond the region. The group is present in all 10 Asian countries, with its main emphasizing in Malaysia, where it's the market leader with over 300 branches, and Indonesia, where CIMB Niaga is among the top banks serving Malaysian nationwide. CIMB was also expand into digital banking, including innovation modeling in Thailand, Singapore, Cambodia, Vietnam, and Philippines. Beyond Asia, it was operating in the UK, Hong Kong, Shanghai, further strengthening its global footsteps. Although with more than 592 branches, multiple access points, and growing digital platform, CIMB is positioned as an Asia central bank with a strong and expanding international presence. For the regulatory environment, CIMB operates under strict supervision, mainly by Bank Negara Malaysia, which oversees areas like loan processing through the standardized base rate framework, as well as capital and liquidity requirement under Basel III. CIMB maintains a strong capital position with its CET1 ratio well above the minimum standard, reflecting resilience and financial stability. Beyond compliance, CIMB has an integrated environmental, social, and governance practice, adopted an UN principle for responsible banking, showing its community to sustainable growth while maintaining its resilience in banking sector. Second, the Board Risk and Compliance Committee, or BRCC, is a central of CIMB risk governance. It oversees risk management and internal control, making sure policy and framework is strong enough to safeguard the group against risks like credit, market liquidity, and compliance. The BRCC also ensures strategies stay with CIMB risk appetite while identifying potential new threats, working with management and the Chief Risk Officer. It reviews exposure, stress tests, and compliance to keep risk taken aligned with the group long-term goals. For the group chief risk, Vera Handajani is an Indonesian citizen, aged 54, is the group chief risk officer in CIMB Group. She was appointed in this role on 1st August 2021 with the mandate of overseeing all risk management matters across the group. Vera was extensive regional experience, having held senior roles in Hong Kong, Singapore, Indonesia, and Malaysia. She joined CIMB in 2013, first served as Chief Risk Officer of PT Bank, CIMB Niaga, and before that, she held senior position at Royal Bank of Scotland in ABN AMRO Bank, where she specialized in credit risk, operational risk, and financial restructuring. Risk Management Committee, IMB, is risk governance in guidance by several key committees. At the top, we're having the Board Risk and Compliance Committee, or BRCC, which report directly to the board. This committee defines the group risk appetite, set strategy and policy, and monitor overall risk management and compliance. The GRCC is further supported by several specialized subcommittees, such as the Group Credit Committees and Market and Conduct Risk Committee, the Operational Resilient Risk Committee, the Asset Liability Management Committee, and the Basel Steering Committee. Each of these focus on specified area from credit and market risk to technology, fraud, liquidity, and sustainability. Lastly, for the risk management practice, CIMB appear an proactive and structured framework to manage risk, ensuring government's accountability and resilience. The process begins with identifying where the potential risk is product active with project and detected early to enable quick response. Next is measurement, which combine qualitative and quantitative assessment at business until country and group level, supported by seniors and analysis anticipate future challenge. For the control, CIMB can exposure with set limit and policy and use tools like stress testing, recovery and contingency plans to maintain continuous event is difficult situation. Finally, through monitoring and reporting risk, tracked using early warning indicators and dashboard with transparent reporting to senior management and board.
So I will continue this presentation. This heat map is based on the probability and impact of the key risk category: credit risk, market risk, liquidity and funding risk, interest rate risk, operational risk and technology risk. By mapping this risk, we can clearly see which are pose the greatest challenge to CIMB in 2025. From the forecast, two risks are in the extreme zone: credit risk and technology risk. Credit risk is a rate high because of CIMB large leading exposure across retail, SME and corporate segment, which climate transaction challenge and economic uncertainty. The change of default are rising, making this a critical focus area. Technology risk is the risk most severe, with the higher probability and impact score. This reflects the fast evolving cyber threat landscape, increased reliance on digital platform, and potential vulnerability from cloud and AI adoptions. The heat map also places market risk in the high category. CIMB is sensitive to global fluctuations in interest rate, foreign exchange, and commodity price, which directly affect earning and asset valuations. The remaining risk, liquidity and funding risk, and interest rate risk and operational risk, are classified as medium. While not as urgent as the top risk, they remain important. Liquidity mismatch, shift in net interest income, and operation disruption for people or process all have the potential to affect stability if not well managed. CIB has developed a strong set of mitigation strategy to respond to this risk. For example, credit risk is managed through portfolio diversification, stress testing, collateral management, and governance oversight. Market risk is addressed with hedging strategy, value at risk model, and independent valuation check. Liquidity and interest rate risks are managed by maintaining high quality liquid asset, complying with LCR and NSFR ratio, and ensuring LLCO oversight. Operational risk is under through training, scenario analysis, and risk control tools. Technology risk is mitigated with a comprehensive cyber risk framework, including risk, rate teaming, and regulatory compliance. So the risk forecast made from 2025 highlight that technology and credit risk are CIMB top priority, while market, liquidity, interest rate, and operational risk require continued monitoring. This framework allows CIMB to focus resources on the area with the greatest impact, ensuring resilience and stability in the challenged financial landscape.
And then we move for the table summary of key risk extract for CIMB Bank. First, the type of risk was credit risk. Credit risk is a risk of financial loss occurring when a borrower cannot fulfill any contract to group. The risk impact it may cause significant financial loss and weaken asset quality, and the risk mitigation that CIMB take to prevent the credit risk is they can do diversification and stress testing. For the opportunities of credit risk towards CIMB Bank is it can maintain asset quality while financing transition industry. And we move for the market risk. Market risk is the risk of monetary loss due to variation in market condition. And the risk impact of market risk towards CIMB is it can lead to financial loss from fluctuation in interest rate. And the risk mitigation that CIMB takes to prevent this type of risk is they can monitor market risk framework and regulatory compliance. And for the opportunity of market risk is it can develop treasury interest rate and commodity solution for client. And we move for the liquidity and funding risk. Liquidity and funding risk is a risk of loss to earning when fails to meet a future or a present fund needs. This type of risk can impact CIMB that they can disrupt operation and force excessive borrowing. And for the mitigation that CIMB take to prevent this type of risk, that they can maintain high quality liquid-fiable asset HQLA. And we move for the opportunities. The opportunities that liquidity and funding risk bring to the CIMB bank, it can expand financing for SME, small company and retail customer. And for the interest or rate of return of risk, this type of risk is a negative effect on earning due to fluctuation in interest rate. It may be reduced by fluctuation in interest rate. The risk mitigation that CIMB bank do, they can benchmarking against Basel and internal appetite or do some stress testing. And the opportunities that this risk takes effect on this type of risk is they can offer innovative hedging instrument and flexible deposit product. And we move for the operational risk. Operational risk is the risk of loss arising from insufficient internal process. This type of risk give impact to the CIMB bank that this risk may cause financial loss, service disruption. And for the risk mitigation that CIMB bank can do to prevent this type of risk is they can enhance risk frameworks and operational reviews. And for the opportunities itself, it can strengthen customer trust with robust governance and some risk culture. And for the lastly, for the technology risk is a risk of loss due to deficiency in technology. This type of risk may lead to cyber attacks and system failure. For the risk mitigation that CIMB bank can do to prevent this type of risk is they can do some ongoing strengthening for cyber resilience and cyber risks. And for the opportunities that this type of risk do to CIMB is the leverage fintech partnership, AI, and also digital platform safely. Thank you.
Based on our risk forecast for CIMB in 2025, the bank will continue to face a challenging environment. First, credit risk remains high but stable. The group has large exposure, but strong provisioning and collateral management are helping to maintain asset quality. Second is market risk, also high but stable. Global volatility in interest rates and foreign exchange but persists, but the CIMB hedging strategies and risk framework provide resilience. Third, liquidity and funding risk is assessed as medium and stable. Strong liquidity buffers support this stability through reliance on wholesale funding still requires monitoring. Fourth, interest rate or rate of return risk is medium and increasing. Global rate cycle could pressure margins, making this an area to watch closely despite solid ALM oversight. Fifth, operational risk remains high but stable. The recent service disruption and regulatory fine highlight vulnerabilities, but CIMB has strengthened its governance and resiliency measure. Lastly, technology risk is high and increasing. With growing reliance on digital banking, CIMB faces heightened exposure and outages and cyber threats, even though investment in cybersecurity are ongoing. So in conclusion, our forecast shows that credit, operational, and technology risks are the most critical for CIMB in 2025. Market liquidity and interest rate risks are moderate but still important. Overall, CIMB must strengthen digital resilience, diversify funding, and continue stress testing to sustain stability in the year ahead. Thank you.
Assalamualaikum. My name is Muhammad Syahrul Nazrin bin Muhammad Azlan, and I'm going to continue on the table summary of CIMB's compliancy with the regulatory requirement. So from 2020 to 2024, CIMB always kept its capital ratios well above the minimum Basel III requirements. For example, the CET1 ratio rose from 13.3% in 2020 to 14.6% in 2024, with the highest point at the 2023, which is 15.3%. From 2020 to 2024, CIMB showed good progress in its asset quality. The bank uses gross impaired loans instead of net impaired loans, which gives a more conservative picture. Gross impaired loans dropped from 3.6% in 2020 to 2.1% in 2024, which shows that they have better credit risk control and stronger loan quality. For credit risk management, CIMB follows the expected credit loss framework under the IFRS 9, which requires banks to set aside provision based on forward-looking assessment. Under this method, loans are grouped into 3 stages. Stage 1 for performing loans with 12-month ECL, Stage 2 for underperforming loans with lifetime ECL, and Stage 3 for credit impaired loans with lifetime ECL. To calculate this, CIMB uses key risk measures such as probability of default, exposure at default, and loss given default. Between 2020 and 2024, CIMB kept its liquidity ratio well above the regulatory minimum of 100% for both liquidity coverage ratio and net stable funding ratio. The LCR stayed high between the 126.8% and 145.3% range, which shows that the bank had enough high-quality liquid assets to handle short-term cash outflows in times of stress. The NSFR also stayed within a healthy range of 103.5% to 112% range, which means that CIMB had a stable funding structure to support its long-term lending. As for the conclusion, CIMB has built a strong risk management framework supported by its board committees, clear governance, and compliance with the Basel III and Bank Negara Malaysia's regulations. Its capital, liquidity, and asset quality ratios are kept well above the minimum levels, which shows that they have some financial health and effective balance sheet management. However, there are rising trends in technology risks and interest rate risks, which highlights the possible vulnerabilities in areas like cybersecurity, IT systems, and global monetary policy changes. Overall, CIMB's risk management is effective, but it also needs to keep strengthening its response to emerging risks, sustainability challenges, and cross-border regulations. For the recommendations, our group suggests 5 recommendations for CIMB. The first one is prioritize technology risk management. They should upgrade their IT system faster, carry out more cyber drills, and use stronger security tools to reduce the risk of system failures and online attacks. For the second is enhance interest rate risk preparedness. They should broaden their hedging strategies, monitor loans and deposits more closely, and apply flexible pricing strategies to protect profits when global interest rates changes. The third one is to keep credit and market risk under control. Be stricter when giving loans in risky industries. Use early warning systems to detect problems, and expand hedging to handle the market volatility. The fourth one is diversify sources of funding. They should reduce heavy reliance on customers' deposits by using other options such as long-term financing, green bonds, and wholesale funding. And lastly is strengthen operational resilience. They should improve backup systems, train staff for crisis situations, and promote a stronger risk-aware culture across the bank. I think that's all from us. Thank you.